Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the second day of the Precious Metals and Critical Minerals Conference. The next presentation of the day is from Terra. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Gerald Panetton, Chairman and Chief Executive Officer of Terra, which trades on the OTCQB Venture Market under the symbol YGTFF and on TSXV under the symbol YGT. Welcome back, Gerald.
Thank you very much, Lily, for the introduction. And good morning, everyone. This is my pleasure this morning to brief you on the exploration update that we have in Yellowknife. As you probably know from previous presentation on the OTC, that we've been working on this project, or I have been involved in the project for the last 6 years. With all of this, I'd like to go to the forward-looking statement, the cautionary statement, as we are a public company listed both in the US and in Canada. And I'd like to attract your attention that you can download this same presentation from our website at goldterracorp.com. We are located in Yellowknife. This is in one of the northest town in Canada where a gold mine were finds back in the 30s. Shut down in 2003 when gold price hit about $340 an ounce. And of course, we've been looking at the project as a very excellent, how can I say, a very, very good a very good exploration camp, the gold located in Yellowknife. The Yellowknife Archean Greenstone Belt in the area has hosted two mines, the Calm Mine and the Giant Mine, and produced 14 million ounces of gold. Before I go any further, I'd just like to show on this slide the importance of the support that we're getting from some very astute financing investors in Canada, including Eric Sprott, David Arkwell, chairman of Franco-Nevada, Mackenzie Fund, $1 billion fund, Ingalls Snyder as well from the New York and Denver, and SSI from the Liechtenstein, and of course, other insiders such as myself, for a combine of almost like 40% of the shareholder base is in very good hands, very supportive hands. You can also go on the Paradigm site, a Toronto brokerage firm, where you can update and get the latest analysts or follow-up from Don Blitt at Paradigm. With all of this, I'd like to jump into, the people behind Terra. There's myself, there's Mark Brum, there's Paul Bonville and Louis Dion, both mining engineers. There's Joe Campbell, the founder and senior technical advisor, still involved. We're veterans. That's what I'd like to say, is that we combine a lot of years of experience. Myself is 40, Paul Bonville, Louis Dion, 40 years plus, same thing with Joe Campbell. And of course, I welcome Todd Burlingame, who just joined us about 2 weeks ago, who bring a lot of regulatory permitting aspect to our company that is planning to go in production sooner than later. Now, going back to Yellowknife, what people always ask, why Yellowknife? Well, Yellowknife is one of the most famous high-grade camp in Canada. It's shut down in 2003. There's been very little exploration since then. This camp can be as big as Timmins, Kirkland Lake, Val-d'Or, Red Lake. So it's very similar to those Archean Greenstone Belt, where you can find low-grade and high-grade gold deposit and big gold structure, such as the Campbell structure. We're in town. We've got all the infrastructure, the power, the airport, the town of 23,000 people, low cost of drilling. We have 4 rigs turning as we speak. I'm currently talking to you from Yellowknife, doing my site visit, overseeing what's happening with the drills. And of course, the Calm Mine option. Why did we sign a deal with Newmont to buy the Calm Mine, which is a brownfield status, which bring to us a mining lease and a shorter permitting process? Very similar to my story of Detour. I brought Detour Gold and Detour Lake back in operation in less than 6 years, from IPO to gold production, because of the mining lease brownfield status of the project. We have a team that has enough experience to execute and a track record of successful mines. Now, the land package we own is extremely large, covering more than 50 miles of the Campbell Shear. That Campbell Shear is very important. As I said, two mines produced 14 million ounces of gold. Shut down in 2003 when gold was $340 an ounce. The bankruptcy of Giant Mine in the late 90s was when gold was $250. This is a forgotten camp, very similar to Detour Lake again, where after the work we've done, we found 30 million ounces and put back the mine in production. There's a nice parallel there, except we're not going to produce 500,000 ounces of gold. We're aiming to produce about 120 to 150,000 ounces. And the blue box that you see on the screen is very important as a brownfield permitted site. Look at it from that site perspective. This is Yellowknife. This is the Kahn mine in the foreground, and you have the town just in the background. And you can see with the line where the mining lease is. It comes also with a lot of very good infrastructures. I was actually spending time at site yesterday. I can tell you there's a lot of value in a brownfield project. First of all, it's permitted. Second of all, there's a lot of infrastructure in place that can save you a lot of money when you start a fresh mine. So because we're right in town, it's very, very helpful. Good saving of money, connected to the town. Everybody goes home at night. Again, briefly, what is the Campbell Shear? A big structure. You can see it on the right-hand side of the slides. These two shear, Kahn Shear and the Campbell Shear, are dipping to the west, steeply dipping. They were mined. 5 million ounces mined at the Kahn mine on the Campbell Shear and 1 million ounces on the Kahn Shear. Very rich, between 16 to 20 gram gold. Using a high-grade cutoff, of course, because you probably could use a much lower cutoff and change the value of your project very quickly. Now, when we go and look at what's left in the mine, there's historical resource, 650,000 ounces of gold that is currently being revalued. There's also Zone 103, which is to the north extension of the Campbell Shear, a zone that I'm going to talk in a second. But also, we're going to be updating our mineral resources in 2026. We're going to also produce a primary economic assessment. At this price, when I signed the deal with Newmont, gold was $1,700 an ounce. Today, gold is over $5,000. We do our study conservatively, but there's no question that we have a lot of potential in front of us to realize. Now, when you look at a long section, looking west, north is on your right, south is on your left, you're looking at a vertical projection of all the drilling and formation that was done. There was a quick question, can you drill all year long? It's very cheap to drill in the winter using ice road and being able to go to different places. But on the Kahn mine, I can drill 12 months a year. So it depends where you are. But I can tell you, currently we have 2 rigs sitting in the blue box on top. In the summer, we're going to be drilling on the north zone. And we have also a program north of town with 2 rigs that are currently turning. I visited all the site yesterday. The drilling has been progressing very well. At the end, on February 1st, we had done more than 3,000 meters of our 15,000 meters program of the winter, and it's progressing very well. The red box is what was mined. It's very important to understand that in the blue box on top, we were able to outline about 700,000 ounces at 6 gram and a 2.5 gram cutoff grade, which is likely the cutoff grade to be used at today's gold price that we will be using for the update MRE. Now, this is quite spectacular because we do have a lot of potential. And just to show you a little bit about the grade that you encounter in the mine, can be as high as 534 gram over 20 meters. Or within that intersection, which I verified the log, 3,000 gram over 3 meters. It's a very, very, very rich mine. Now, when you look at the potential of the mine and you look at the different shaft, the different infrastructure, we can go back in the mine, but we will not start going back in the mine and dewatering. We will start south in the Yellow Ricks area, where we believe we can have about the first 5 years of the operation while we're dewatering the mine and eventually access the zone 103, which is North Campbell Shear, which was never mined before, due to enough gold within the main mine, but allows us to have a potential for more than 500,000 ounces open at depth below the 800 meters level. There's a great potential to be tapped. This is a mine that was forgot about it, that was going through closing and reclamation after Newmont purchased Miramar in 2008. It's got tremendous potential. And we've been realizing some of it. This year with the 4 rigs, we will realize more. And stay tuned. There's going to be a lot of drill result coming up in the coming months. Now, this is the Campbell Shear. The Campbell Shear is a big structure. It can be 30 meters to 50 meters wide, or if you want to call it 30 yards to 50 yards. So it's very big. And you can look at how big it is, but the gold, it can be only in one area or 2 area or 3 area within the shear zone. And mainly due to the quartz veining, more smoky quartz, banded quartz with sulfide mineralization. It's tremendous. Now, when you look at what else we have beyond the Con mine, you realize that, 1.2 million ounces in resource north of town. All infer, yes, because we don't have a mill, it's north of town, and we have to do some more drilling. But look at some of the result we've had in the Wash Lake area. 32 grams over 3 meters in 2022. We haven't gone back in 4 years because of the lack of exploration funding to be doing the drilling. This winter, we're doing roughly 5,000 meters north of town with 2 rigs to reassess some of our good result of 2022. Moreover than that, we have the Cresserum deposit, 300,000 ounces at 6 grams. Samoto, that is going to be looked as a high-grade deposit. We outlined 800,000 ounces at 1.6 gram in an open pit. But the strategy now is changing to go high-grade because the footprint is much lesser. The disturbance is much better. It's less disruptive to the environment. Look, we are a company exploring with a lot of experience. You can see some of the results that we have. They're very close to surface. They're not very deep. They're accessible via a decline. And when you look also at our commitment, look, the company that I work with, that I lead, with my leadership and the experience that we have, the people I surround myself with, we all veterans of excellent mining experience. The 3 mines I built, 2 with Barrick and plus Detour Gold, were 3 big success, not just economically, but environmentally as well. ESG is close to our heart. We work with all the stakeholders. We have town hall meeting on a regular basis, and we believe that the project has quite a lot of support in the Yellowknife area because of the diamond mine shutting down, for example. Now, that's the goal, producing gold. People sometimes ask me, what's your plan? Are you planning to sell the company? Look, I'm only a small shareholder in the company, like everybody else. We sell the company when we think it's the right time to sell it because the offer is unrefusable. My job is to de-risk the project and create the value. We are currently valued at less than $35 US an ounce for a combined resource of 2 million ounces. Why would you not take and buy shares of Gold Terra as an option at $35 an ounce when gold is over $5,000 an ounce? When we de-risk the project, which is our next step, which is the time catalyst, we will deliver value for our shareholder by de-risking the project and bringing the project all the way to production. I've done it 3 times. For me, it's not a challenge. For me, it's just routine. Doing A to Z, all your homework, and bringing the project back to production. There's no question the stakeholders are supportive and the timeline is realistic. It's aggressive, but realistic. Stay tuned. I think we're going to have a lot of very good news over the next while in 2026. It's a very important years for us. We are drilling more than 10,000 meters. We're going to have an MRE update twice, one at the end of Q1 and one sometime in Q3. We're going to have a preliminary economic assessment by the end of the year, a project description, and of course, going into a permitting process that could be short form in 2027 with a production decision by the end of 2027. We look forward to share with you the development of our project, the drilling result, and the advancement of the Con Mine acquisition. Thank you very much for your time. I see a lot of questions, and I'm going to try to answer them the best I can. There's about 8 messages. So what I'd like to be able to do is give you try to answer the question the best to my knowledge. We have about 15 minutes. I see that someone worked at the Giant Mine. As you know, the Giant Mine is under a large reclamation status, all paid by federal government and taxpayer in Canada due to the Royal Oak bankruptcy in the late 90s. Yes, you do have reserve. You do have proven probable reserve. Sometimes you have less, sometimes you have none. The Giant Mine cannot be touched. It's something that is beyond our reach because it's under a federal remediation project. The Con Mine does have 650,000 ounces of reserve left. But let me tell you that it's very hard to go back in a mine while there's no more mill. So I need to justify building a new mill, which will cost, say, don't quote me, $300 million US. So if I find 1 million ounces, it will cost me $200 per ounce to build a new mill. That's what's missing. So my goal in 2026 is to come up with a resource, a PEA, with at least 1 million ounces of very good ounces that sustain going through permitting and financing the project. At today's gold price, there's no question that spending $300 million US and having 1 million ounces, which in situ, in the ground, is worth $5 billion, is a great opportunity. I hope I was able to answer your question. And I think I answered the question on, can you drill? Of course I can drill. We're drilling all winter long when we go out of town. In town, on the Con Mine, it can be done 12 months a year. So it depends what it is. It's very hard to compare gold run. My third question is about how does the gold price of 2009. I've been in this gold business from the first one in 1980, 1981. Gold went from roughly $35 an ounce to $800 an ounce. That's a big jump. The gold in 2007, when I bought Detour Gold at $600 an ounce and ran up to $1,900, is 300% run up. But it was due to a financial crisis. I think the fundamental of this current market looks a lot more like the 70s without the oil crisis, maybe, but more about monetary and about debt, like government debt. In 1960, gold was not being purchased by central bank anymore. In 1971, Nixon decoupled the gold. Gold is coming back with a vengeance for central bank to accumulate something that has real value. As a geologist, as a person who understands the periodic table extremely well, gold is something that you can count on. You can just buy physical gold, put it aside, put it away, and a few years later, 5 years or 10 years later, I'm not asking you to put all your money in gold, but I can tell you that buying physical gold is not a bad investment. Even if you think it doesn't give you any dividend revenue and stuff like that, it accrued in value over time because there's so much gold and gold cannot be replaced. So that's the way I like to see it. And for those who like the gold bar, I bought 5 kilos from that gold bar when I produced it at Detour back in 2013, 13 years ago. And my return is 300%. So it's feasible. The next question is being asked is, what are the main technical, permitting, financing conditions that you meet before you make a production decision? So when you make a production decision, usually there is the project on a technical basis. That's why you have a feasibility study. By the end of 2026, we're going to have a PEA. The PEA basically will allow us to have everything that goes in the feasibility study, but in a summary report. Depending how your PEA is done, it's very close to the fees because you've outlined pretty much every option. When you go to the feasibility study, you go to all those options and you take the best ones. It could be for the tailing construction, it could be for the process. But having said, the coal mine was in operation from 1938 to 2003. We know every step to improve the processing and recovery of gold that was made over a period of 65 years. So there's a lot of knowledge, in-house knowledge from the past that can be used to rebuild the proper mill that will recover more than 90% gold. We know very much that part doesn't need to change. We could maybe improve some of it, but we know exactly what needs to be done. Technically, you have to prove your resource. How much money do you need? How much ounces do you need to satisfy a production decision? In my mind, at today's gold price, is 1 million ounces. We're going to go back on the ground. We already have priced the ramp to go closer to Yellow Rex. We're going to have a budget to eventually dewater the mine using the cash flow. I think this is not unfeasible. Look, my first mine at Barrick was built in 4 years, Chulawaka, 201 to 205. Detour was built in 6-year IPO to gold pour, including 24 months of construction. We have a good team. We only look for the best advisor and the best consulting firm. Like, for example, for the MRE, we've hired SLR Consulting out of Toronto, the ex-Roscoe Posco, very good team. So this is how you deliver a project, a solid project with the right people. The question about a coal mine. The coal mine was purchased by Newmont when they bought Miramar in 2008. And since 2008, over the last 17 years, they've done an amazing job reclaiming and remediating 98% of the mine, which is a great thing because the mine site is clean. But Newmont is stuck with the mine for the next forever. They will have to monitor the water quality and things like this on the mine site. Our objective is to take on the liability to access the more than 1 million ounces potential the mine has and put back the mine in production. And some of our actually new project will look after some of that remediation and finalize it forever. So at the same time that we will be operating, we will do progressing reclamation. So I think it's a site that has a lot of value, very similar to my Detour Lake story, and it's good to see that. I think the question from this gentleman is about how do you get all the way to the steps needed to go to production. The timeline is outlining some of them. You know, you need to have a good MRE. You need to have a good PEA by the end of 2026. You go then with the project description to the regulator. I just hired Todd Burlingham, boots on the ground in Yellowknife, with permitting and regulation experience in Yellowknife from 20 years ago. Nothing has changed in 20 years in Yellowknife, but we have the team that is building towards a short-form permitting process in 2027. At the same time, we finish the feasibility study. Basically, technically, what you need is a new mine plan and a new closing plan. Those are the two biggest elements to be approved by the government. You got a good mine plan, you got a good closing plan. You're a good citizen, you're going to be reclaim it well. And of course, you have to put an environmental security bond, which will be determined at the end of 2027. Then your production decision can be made and your financing can be done. And if you have a solid project, you can raise the money. But you know, when I built Detour back in 2011, 2012, It cost the project 1.5 billion US. 10 years later, Cote Lake was built for 3 billion US. Now, Detour will probably cost 4 billion to build, or 5. These projects are too big to be built. It's like you need so much gold, and the payback is so far down the road. This project, payback at $3,000 an ounce, will have a payback of less than 1 year because we're not spending billions of dollars rebuilding it. Think about it. 1 million ounces in situ value in the ground is $5 billion. I have a few more questions. I appreciate very much. So, Mr. From Bali Investment for being there today. If I can read correctly, you're more than welcome. And of course, what are my assumptions for ASI? I think in the PEA, the ASI would be somewhere maybe around $1,500 US. It could be also $1,800 US, but I'm pretty sure it's going to be sub 2,000 AS, maybe even including the depreciation of spending $300 million. But the question is too early to be answered. You have to give me a bit of time to do all the calculation. For example, I have the pricing of the RAM that will go down at Yellowracks. Do I have the pricing of a ball mill and a SAG mill? We're building a 2,000 ton per day. There's a lot of homework. So when you start putting the project together and you are at the PEA level, you're probably plus or minus 25% or plus or minus 30%, depending on how much work you've put into this pricing. When you go into feasibility study, you bring back the expectancies to plus 10 to 20%. The real number comes when you finish building. I was supposed to build Detour for 1.2 billion and it cost 1.5 billion. So it was 25% over budget. However, we built it on time in 26 months. So there's a trade-off between spending a bit more money to finish the project on time, which means cash flow coming out, versus the mine itself. Look, our job is to present to our shareholders a project that will work. But all the detail and the questioning about this, it's very hard to be able to have a very good answer today. Now, I didn't realize how many more questions there was. Look, I am running out of time. There's only 2 minutes left. Please send me an email because I think I'm always available to answer any question, and I would be delighted. My email address is at the back of the presentation that you see, the last slide. Please do not hesitate to introduce yourself, say that you were on the OTC presentation. I'm always available to make more time for investors interested in the company or in the project and have further questions. I would like to thank you very much for your time.